Well, today the circus has come to Washington, D.C. to discuss the Reddit retail investor revolution. And while there's sure to be fireworks, there really is little chance that we'll see major changes happening in the system. I got to tell you, this saga has been personal to me from the very beginning. After serving 4 years in the U.S. Air Force, my entire life has been about investing and helping individual investors. And I can tell you, I've had my ups and downs, and I've learned a lot of lessons the hard way. I have seen this system from the inside, and I know there has never been a level playing field. Yet I encourage people to participate because it is the greatest wealth creation machine in the history of mankind. Even with the unfairness marbled throughout the system and a public relations campaign that's always been designed to keep individual investors chained to the dependence of professionals, I encourage and continue to encourage everyone to be in the stock market. I mean, let's face it, people had been losing faith in the market. In the midst of a 10-year market rally, investors actually pulled out tens of billions from U.S. equity mutual funds. Meanwhile, young adults saw can't-miss long buy ideas that, like IBM and GE, only go straight down. So what's a millennial to do when they see a headline like this? Goldman Sachs traders made more than $100 million on 14 separate days amid the first quarter's fierce volatility. I mean, the trading desk at Goldman posted gains on 53 of 62 trading days, all while encouraging the public to settle for pedestrian gains of about 7% a year for their own accounts. So I think the reaction from the financial media has been despicable in general, calling these traders dumb and doomed to fail. And many of them, by the way, made a lot of money long before financial media even caught wind that this was going on. I mean, I've been asking my own guests for short squeeze ideas for months before it officially became a frenzy. You know, I don't think anyone is really out there looking out for the small investor. Because if Wall Street cared, if the financial media cared about them losing money, then why didn't they say something when they lost a collective $400 billion on just 5 blue chip names alone last year? I mean, heck, 40% of the S&P 500 were big losers last year. And this whole thing has been about keeping people in their lanes. Of course, some people will lose money and some people will make money. And if there were no risk, there would be no financial media. There would be no need for advisors. I mean, we'd all just buy these great stocks that were certain to go up and never have any dips and do something else. Here's the thing. My greatest hope is for folks not to lose their faith in the ability to use all this information now at their fingertips to make trading and investing decisions and make this a lifelong endeavor. And maybe they will get a break from regulators and others that feel the need to sort of right now always tilt the odds in favor of those hedge fund giants.